Welcome to the Capital Discussions Roundtable. I'm Tom Nunemaker with our guest Iggy from Stuttgart. Before we get started, let me share my screen real quick and go over our disclosure. Let me know when you can see that, hopefully now.
Yes.
Okay, so Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. You don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. So with that, let me stop sharing and let's see. Stop sharing. There we go. And Iggy, you can start sharing your screen and we should hopefully see it.
Okay.
Okay. I can see your screen, and I think you had this presentation before. This is kind of an update with some live performance results that you had for the second half of the last year. So it's nice to have you back, and take it away, as they say.
Okay. My name is Igi Schalajda. I'm from Stuttgart, Germany, and I'm glad to present here my triple tool trade. I'm developing systems since 2003, and this system I developed about 1.5 years ago with a long out of sample area. And yeah, here it is. Here we go. The triple tool trade is a VXX options portfolio, consists of 3 parts. Part 1 is selecting a trending underlying. Part 2 is create a robust trading system. And part 3 is use an option strategy instead of trading the underlying. Part 1, the underlying. This is from six-figure investing. You see it at the bottom. Searching for a good trending underlying. VXX is a volatility ETN and trending well. The value of VXX is set by the market, but it's closely tied to the current value of an index. That's the S&P 500 VIX short-term futures that manages a hypothetical portfolio of the 2 nearest to expiration VIX futures contracts, only the 2 nearest. Most days, both sets of VIX futures that VXX tracks drift lower relative to the VIX, dragging down the VXX value at the average rate of 4% per month and about 30% per year. This drag is called roll or contango loss. XIV is the opposite ETN and also trending well, but in VXX you have sometimes low prices, commissions, and selecting strikes could be an issue. XIV doesn't have any options. So my best choice was VXX and SVXY, high value and options available with acceptable open interest and spreads, but only short history available in SVXY options, including weeklies. Now let's have a look on the VXX. This is a logarithmic scale. It's not a normal scale, it's a logarithmic scale. And you see it's trending down all the time. But be aware, you see my mouse here, right? But be aware of these eruptions. This could happen very overnight and could be very strong. Here you are at a level of about 1000 in the adjusted scale. And now you are above 4000. So the VXX went up 4 times, but then the drift started again. It's nice trending, and it's in a logarithmic scale, but be aware of these eruptions. The other one is the XIV in logarithmic scale, started in November 2010, and it was calculated back to 2004. And this is the SVXY in logarithmic scale, similar to the XIV. It's also adjusted and started at 2011. Now to part 2, how to trade this underlying, because it's really a nice trending underlying. For trading a trending underlying, a trading system should minimize drawdowns, be as simple as possible, and for a robust system, curve fitting has to be avoided. Example for a drawdown, the XIV went 2015 from 97 down to 31. In my systems, I reduce the noise. I only use close end of day, no open high-low data. Rules for enter trade are several algos like moving averages, Bollinger Bands, momentum, etc. And rules for the exits are trade duration and some emergency exits. When the VXX is drifting lower, XIV will drift higher. A robust trading system should perform on both underlyings by using same algos, just changing enter long to enter short. Same date of entry, date of exit, entry level of close, number of trades, investment per trade, etc. And does it work? Look here. On the left side, you see the VXX system running. On the right side, you see the SVXY system running. The red one is the equity curve. The blue line is some sort of cutoff of the system. If the red line is crossing the blue line down to the downside, the system will be switched off. The system is investing $1,000, and if the system is lower than $600, then the system will be cut off and will be managed again. Here you see the equity curve, the red line, and the all-time high minus $600. At the bottom, you see the VXX in logarithmic scale, and you see all the signals when to enter and when to exit. At the bottom, you see always the same spare and all the same time, because it's always the fixed trade duration all the time. You see it on the left side and the same signals on the right side. The only difference is you are going here short and here you are going long. And you see the results are pretty much the same. Not exactly, but pretty much the same. This is a system in detail. The invest per trade was $1,000. The drawdown is smaller than $500. 80 trades were made, 80% winners. Average return per trade is about $100. The profit is $8,066, but without commissions. Here you see the vertical blue line. The blue line is the out of sample, because in this area, the system tested how to run the system. And on the right side, the system doesn't know any data. You also see here all the time the same duration of each trade. There's no emergency exit. And when the system is going down here in SVXY, this is a system on SVXY, the system doesn't trade in a downtrend and sometimes even in a sideways market, like here, like here, like here, like here, and like here. I created a portfolio of 9 systems on VXX. Each system was backtested from 2004 and 2015, running out of sample from 2016 without any correction. You see it here. From this time on, the system doesn't know the data which is coming and is running blind. Each system has about 80% of profitable trades. Average max drawdown is less than 47%. Trade duration is between 20 and 40 trading days, not calendar days. Only short on VXX. about 75% in the market and 5 to 8 trades a year, rests most of the time in sideways markets. The systems are running, and the idea of the system is let the drift work for you. And now the portfolio of 9 systems. You see, the red is the equity curve of the backtest. The blue is the underwater equity. So maximum 9 systems are invested, and the maximum drawdown of all systems together is about 3,200, and that was 2008. Everybody knows the time about what happened about 2008. There was a sideways and then the eruption. This is the out of sample area. The system is running without any correction since 2016. And this is the underwater equity during this time. So from this time on, the system doesn't, the 9 systems doesn't know the data, and the system is running out of sample. Okay. Now our option strategy. Instead of trading the VXX or SVXY, I decided to use options. The pro for options is shorting VXX is extremely risky. Can explode to the upside like 2008, 2010, 2011, 2015, etc. And maybe soon, who knows? But watch margin extension. When you are short VXX, the margin will explode. Buying SVXY needs much more capital than buying options, but the cons are when buying options, time value can be an issue, and of course, maximum loss is possible. I tested only limited risk strategies, put vertical spreads, call vertical spreads, butterflies, long put call, broken wing butterfly, etc. Put and call verticals limit your profit. Butterfly and broken wing does not really fit to trending markets. My choice was buying VXX puts out of the money with high DTE, and I compared it with trading the underlying or trading the broken wing butterfly. Same number of trades, same date of entry, same date of exit, etc. Here I took the system, the data of the system. This was the backtest. The start was, for example, trade 58 was starting at 3rd of April 2014 and ended on the 27th of May. Period was 36 trading days. This was the profit. This was where it entered, and here is where it exited. Here on the yellow, you see the result of the trading system in total. So you made $1,614 without commissions. The blue one is I didn't trade. You don't trade the SVXY going long, but you take options. Here you take options out of the money. Here you take options at the money, and here I tested a broken wing butterfly, which is open to the upside. You see here 65 was the center, 65.5 was the upside, and 61.5 was the downside. The trade duration was the same, out of the money or at the money. The results was 1,614. This was the result of the broken wing butterfly. This was the result of trading the calls at the money, and this trading the calls out of the money. And here's the graph for it on SVXY. There are not a lot of trades because you don't have weekly options very long, only from 2014. No options, weekly options are available before. The yellow line is trading the underlying. The green is the broken butterfly. The orange is the call at the money, and the blue is trading a call out of the money. And you see, from beating the underlying, if you trade a call instead of the underlying, you get 1,615 to about 7,000, which is about more than 400%. This was another test. This is the original system. This was a broken wing butterfly, and this was out of the money call. Another test on SVXY. This one is the broken wing butterfly, which is better, but it's only 11 trades. Green is buying a call out of the money, yellow is buying a call at the money, and this is the trading system. And this is now a test option strategy on VXX. There are more data available. So you see, these are now 40 trades. The orange is the trading the underlying, but don't short VXX. It's really too risky. Blue is buying a put out of the money, and yellow is buying a put at the money. So why does this system perform so well? It's a combination of these three tools. You ride the trend in a trending underlying with a built-in drift. The trading system selects the best time when to enter and exit. Probability of profit is about 80%. Drawdown minimized from 436% to 47%. And using an ideal option strategy will raise your P&L significant. So take it, profit from the built-in downdrift in VXX or in the updrift in SVXY. Trade it. Minimize drawdowns by a robust trading system. Without a trading system, you will have really, really big drawdowns. And trust it, beat the results by using option strategies. And when you are trading a system, trade the system and don't want to do anything discretionary during that time. Additional infos. My portfolio trades 9 systems only with the trend or the drift and uses only close end of day. Signals are provided for the VXX. The signals work for VXX by a put or SVXY by a call. VXX performs slightly better. In case of risk aversion, you can buy in SVXY, not the option, but the underlying, or you're buying the XIV, but don't sell VXX. Trading time will be the last 30 minutes of each trading day. An email will be sent several hours before if a signal is expected. In my account, I invest maximum 6% per trade. Each system will be switched off when the equity curve of the original system is below the blue line, as I showed before, which is the all-time high minus 60% drawdown of the investment. Options boost the result in both directions. Limited risk, of course, can trade max loss per trade. This system is easy to manage. You know when to exit at the beginning of each trade if there is no emergency exit. Emergency exit will be in times like 2008. So there are not many emergency exits. No adjustments were made during the trade. When you trade the system, you get only 2 signals in about 2 months. The first signal is to enter, and the second signal is when to exit. and you know it in advance. Possible adjustments when a loss occurred is let the put run till expiration. DTE, also days till expiration, should be around 19 or more. Sit and wait and let the built-in drift work for you. Look at the live results. There are some examples because I really started at a bad time. In sideways or opposite markets, number of trades will be much lower. The systems may be updated from time to time, but no update yet. Additional strategies may be added, will be announced, but nothing yet. And this system is easily scalable to the up or to the downside. For example, you buy a put for about $5. You have an investment of $2,000, so you buy 4 puts. If you have an investment of $3,000, you buy 6 puts. Option backtests were made with OptionNet Explorer, trading system with Investox. It's a German software. And of course, max loss is possible. You are trading options. I use a back ratio portfolio hedge against black swan events, which may reduce loss significantly or maybe even more. But now to the most exciting pages, live results. I traded at Interactive Brokers. The commissions are included, and in the routing I use max rebate routing. 29 trades were made so far, 28 winners and 1 loser. Why 1 loser? Because I didn't wait for the drift. I'm a little idiot. Trade duration is about 20 to 14 trading days per system. And I delayed the exit and waited for the drift if the trade was losing. And here a chart. You see here, nothing happened. It was nearly nothing, the first 9 trades, and then it started to run. The VXX went up in August 17. The adjusted data is it went from 45 to 55 in 4 days, and that's really not a downdrift. But I waited for the drift, and it happened. But it could also be theoretical a total loss, like for example 2008. This is the here I compared buying puts or shorting VXX, which you really should not do. Same investment per trade. Here you see the 29 trades. Here you see a little loss if you trade the underlying, but also 29 trades. But these 9 trades were flat here and here a little underwater. So this is the performance per trading day. The average is 1.23% per trading day. You see the first 9 trades didn't perform, and then it really went up. Here also some not so profitable trades, but the average is 1.23% per trading day, not calendar day. And this is the performance per trade. The average is 30% per trade, including the bad trades at the beginning. And of course, the performance is better the longer the trade is running, but the longer the trade, you have less trades a year. And this is how it happened. The absolute return, all the closed trades from July the 14th. And you see the first trade closed on 15th of August. Nothing happened here. And then it went up to nearly 100%. It was only 99.58%, including commissions. Not included is the Black Swan hedge, which will cost about $500 for about 6 months. That's it. Okay, Tom, can you hear me?
Yeah. So when you say that's it, I guess you meant that's it, like your presentation, that's it.
Yes, I have some additional infos. These are the current trades. This trade ended on 21st on November. I'm trading the VXX. This is the name of the system. This is the strike I used. This is the DTE. The first one was running. It's running until DTE until March, and the following all running until June, but only trading between.
I think we're just looking at a PDF file. Is that what you're trying to show us? Absolute return?
What?
Yeah, I see something that says absolute return. It's a chart, kind of blue.
This one?
Yes, that's what we see.
And these are the trades running at the moment. I invested at the beginning 2,000 per trade. Now I'm investing from this one 3,000 per trade. And at the moment 26,000 is in the invest sum, and the profit is about more than $7,000 at the moment.
Oh yeah, we're still seeing that PDF. Maybe you should stop sharing your screen and then reshare it.
Okay.
Let's give that a try.
Okay.
Not yet.
I stopped the presentation.
Yeah, you
Now-
stopped sharing. Can you reshare it? Share your screen again?
If you have multiple screens, make sure you choose the right one.
And don't share an application, share the screen at the desktop.
Hey.
Okay, so we see the PDF.
Yeah. And now, neue Freigabe. How can I give it back?
I mean, to stop the screen sharing?
Stoppen? Stop.
Yeah, we're just seeing that PDF. Can you close the PDF? Maybe that will show what's behind it. Oh,
Ah, okay.
maybe you were sharing that one application.
Okay, now?
Let's see. Not yet.
There's nothing on my screen now.
Yeah, we don't see anything yet. So if you try and share the screen, then what happens?
And how can I give it back to you?
Well, did you want to show us the trades? Because we didn't see them. We're seeing that other PDF document.
This one?
Yeah, that's the one we didn't see.
Okay. These are the current trades entering on 21st of November, trading the VXX. This is the name of the system. This is the strike I used. This is the DTE I used. This is the price I paid, and this is the commission I paid. And this is the trade duration. And all together is about 26,000 investing, including about more than 7,000 of profit at the moment.
So you put what, about 3,000 or 4,000 in each system?
No, this system is running. This trade is running just 3 days. The profit at the moment is $339 from TVS. And these are the other trades running. All together about 7,000 profit at the moment, but it will not close in the near future.
So that 7,000 profit on how much margin did it use?
You don't have any margin. You buy puts.
Oh, well, how much capital does it require?
From this trade on the 28th of November, I used 3,000 per trade.
Okay.
And this one was still a 2,000 trade, and this was all this one were 3,000 a trade. And the investment at the moment, 7 trades are running. You see 1, 2, 3, 4, 5, 6, 7 for maximum 9 trades will be running, and 7 trades are running at the moment. One new trade will be entered this evening, short before 10 o'clock German time, PM.
That's what, 4 p.m. Eastern.
Yeah, okay. Close of the market, sure.
Yep.
And I will enter with an amount of 3K and have to look for the strike I will use. And the investment sum is about 20,000 and 7,000 profit at the moment.
And then you typically now you have 7. Is that an average number of trades you have open, or?
Most of the time, it depends on the trade, on the trend. If there's a trend, all system will be in. But if there is no trend, there will be no trade. That's all.
And you talked about reversal trends. Did you have the system running during August of 2015, in the late August when we had that big pullback? That's always right. It's things like that are always scary in any
Sure.
volatility system.
Mm-hmm. One moment.
I apologize to Paul. Okay, Paul Demers, if he's on the line. Every time I say November 24th, 2015, he flinches. Okay.
Here's the time.
And so
2015.
I was just interested. So what ends up happening is because you have a limited amount of capital, as soon as you go down $600, if you double your size, you're also doubling your limits. Is it $600 per 1,000, per 2,000? That wasn't clear.
600 per 1,000.
Per 1,000. Okay, so it's a 60% pullback on your long options. So I assume that do you trade just once a day or as soon as it happens?
Pardon? One more?
Oh, do you do like just end of day trades, or do you trade intraday if you need to make it close an open position?
I only use end of day data.
Okay.
I don't like the noise.
and no, I agree. And in my systems, I had to take out noise, and that was one of the way I did it. I did it at the end of the day. The challenge, okay, in something like that is that does your system, will it get you out of your trades before you hit your max loss, or was that a time when you hit the max loss?
I'm running a fully automated system, and I trust the system, because when I don't trust, I should not trade the system. So that's
understood. So I'm asking, when did the system get you out?
The last 30 minutes.
So you don't use good till cancel orders, you just manually put them in?
Yes, because you are the system and the software can't trade options. So I have to choose. The system tells me when to enter and to exit, but I don't trade the underlying. This could be made automatically. But I have to check what options I use, what day till expiration I use, and what strike I use. And this I have to do manual, but with a strict with strict parameters. For example, I take when I buy a put, I take a put about 10% below the actual price. So for example, the price is at 25. I take a put at 25 is a bad example, because 22 22.5. There, you don't get a strike at 22.5, so I have to decide take a 22 or 23, and then I enter, yeah, the last 30 minutes. Understood?
Yeah, is the exit based on the underlying price or the option price?
The underlying price.
Okay, so do you think it's possible
But
to have?
the underlying price is I trade trade duration, and when I trade duration, I know after 23 days I close the trade to the end. The price doesn't really matter. It's just another sort of thinking.
Right.
I'm not price fixed. I'm fixed to the trade duration. I tried a lot of exits and yeah, looked what price or something like that. And the most robust system is when you are trading with trade duration. You don't have a profit target. You don't have a something like yeah, ATR or momentum device or something like that.
I agree totally. It's technicals do not work on this.
Yeah. And I really tested a lot of exits. And the best thing in trade duration is you take the profit all the time. And you will not be unhappy if you take profit all the time. And the trading system really gives you two signals in about 2 months. It's entering, and after, let's say, 27 trading days, you exit. That's
Mike,
all.
go ahead.
I was going to say, so because you don't have price, that meant that you held your long puts through that big spike in August 2015, and any trades that were open probably went out at max loss. Is that a fair? Okay.
Yeah.
I do understand now. Okay.
Mm-hmm.
Because I wasn't understanding how you ended up getting out in times. And the answer is you're controlling it by buying puts. So the thing is you have a maximum loss.
Yes, sure. If you buy puts, you always have the risk of max loss. So the system will be deactivated, but the option is running in running in total loss. Yeah, hopefully not all the trades are invested at the time, but it's maybe could be should be forget it. So when you have a longer distance, when the price is going low, for example, in this this is SVXY,
Mm-hmm.
you are not in you don't have any trade because
You
there
just
is
have the
no
last
option.
ones, right? The last ones that you left on, or so
Yeah.
they're going to be
You
fewer.
will lose this one, for example, this one at this
Yep.
at this point, but here you don't have any more trades.
Right.
And you wait until the drift will go on again.
And you can see that in the equity chart with that flat line there.
Yeah.
Right above it. Yep.
And yeah, you may have 2 years no profit if there's really a bad time. You see here, 2007 to 2009, no profit, but no loss.
Well,
and you are running from 22 to 2.
Yeah, you can't have any profit during that time in this type of system unless you went the other way also.
Yeah.
I don't see any more questions. So I guess, Iggy, we're going to try a trade alert service with you if people want to take a look. I'm still building it out, but if I guess you're pretty much ready to start, aren't you? You have, like you said, a trade coming up today.
Yeah.
Do you know what that trade is yet?
No.
Oh, okay.
We are at 26.44 at the moment. I think I will take the strike of 24 and have to look for the price. Wait a minute, VXX. Options. I take the June. Here's the June 24. It's about $4 to $4.20. So when I take 3K, 4, 36, I will take 8 trades, 7 or 8 trades, contracts, 24 strike. That's it.
And yes, Michael asked if there's a trial. There's a, oh, and we're only seeing that absolute return PDF again, by the way. And Andrew asked, will we know the exact rules of each system in the service, or will the service just be a buy-sell notification?
The system is fully automated, and it says enter or don't enter. And these are 9 systems, which is every system is different from the other one. One is working with a moving average. One is working with some sort of momentum. One is working with Bollinger Bands, for example. But the system will tell us a signal. I don't know why, but there will be a signal. And I trust the signals because I have an out of sample area of more than 2 years now without any correction. This looks like really a very robust system.
And Andrew, yeah, it is, I guess, a black box type of service, and that Iggy stuff is all kind of programmed.
Yeah, sure. That was I tested and programmed. It took me about 9 months.
Don't see any more questions. So do you have roughly the time that you would be sending out trade messages, say like 30 minutes before the close?
In the morning, I will send an email if there will be a signal.
Okay.
So, and when there will be a signal, then I will give the information with which strike I use, which DTE I use, and which how many contracts, for example, and how long the trade will take. It will last. The trade duration. This will be maybe in the morning or latest 1 hour before market closes. So you have enough time, but it's not really time sensitive. You can also, if you miss the trade, you can also enter it tomorrow, because you have really a lot of time value in the trade.
So the timing is not really critical that you get in the same day.
Yes, that's not critical, and it's really it's okay if you have a job and you get 2 signals per system in 2 months. That's not what you call high frequency trading.
And can you use GTC orders to exit, or do you not recommend that?
I tried different things. For example, I also tried good after time order. If I'm not in my office and I'm on the way and don't have access, I can do good after time order and say half an hour before market close, I go market. This also works. You have a difference of maybe 5 cents. That's not a big issue. You can do a good after time order. You can go market. I try normally I try to get I set a limit in the last hour before the market closes, and then I adjust the limit until I get filled.
And Serge had a question. Typically, what's the expiration duration of the puts? How far out are you going?
6 months about. You don't get always 6 months, sometimes 5 months, sometimes 7 months.
So the one you put on today will be
for example, yes, if we take the example for today, you get March or you get June or January next year. These are the puts available. And March is too close for me, so I take the June.
Okay.
And January is far too yeah. You pay nearly double the price, and you have too much time value in it. The trick of the time value is I use, when the trade is running 6 months, I only use 1 or 2 months, and then I kick the trade out. So I have enough time value which is not running against me. For you see in the example, at the money, when you take at the money trades, you don't have that profit if you are taking trades out of the money, because the time value is the biggest at the money, and you pay most at the money, time value at the money. That's why I take out of the money and wait the price going to my strike. That's the plan.
That sounds good. I don't think we have any more questions. Jim, do you have anything you want to add?
Was I on mute now? Can you hear me?
I can't hear you.
Oh,
Yep.
okay. Yeah, I'm sorry. I was on mute before. No, that was it. The thing that I'd end up just pointing out is what I had mentioned. In these types of systems, people who want to end up, if you try to choke off your losses too tightly, you just give up too much of your profit. So it's a balance, right? And you have to find a balance of, these are systems that will have a little bit more of a pullback, but you can just manage that by investing the amount of capital that you're comfortable with.
Yeah, sure. That's why I don't use 100% of my capital. I'm not crazy.
Right. In options like that, you'd have to. And especially because the thing is that you don't have a trigger to get out other than the calendar.
Right.
I have an emergency exit in two of the systems, but the difference is not very much. Really, not very much. Yeah.
It's because it's.
I still have 4 months for waiting for the drift to re-enter.
Right.
So, because when it's going really up 400%, it's finished. You don't have to discuss it. It's finished.
You think?
Yeah. You don't get nothing for the put. You have still 4 months, and the volatility is going up, so the put is more expensive, but.
Yeah, but that's pennies on the dollar compared to it moving up to 100%. So it's dead at that point.
Yeah, it's dead. It's finished. But for example, in August, let's look at the August. I really had a bad time when I entered. Charts. Let's have a look.
Yeah, you'll see that, and it didn't even hit its low. Okay, right after the fall, it ended up having a second. Oh, we're looking at it didn't hit its high. Okay, right afterwards, actually ended up.
Here I entered.
Yeah.
Here I entered, and boof.
Yeah.
And the trade we're running. I have 6 months till the end of the trade, and I waited for the trade, and I waited for the drift. Here I was not very lucky, of course, but I waited, sit and wait, sit and wait, sit and wait. It went up, it went up, and went up again. Sit and wait, sit and wait, sit and wait. I took a good till cancel order, 2 ticks above my entry price, and here I went off.
Now you only have data, okay, going back to 2009 on this, okay, late 2009. Did you do anything to test 2007 and 8 and 9
Yeah,
before?
sure. You can recalculate the prices.
Okay, good. And how did that work with your, and how did that work? Because you couldn't do the option side, right? You can recalculate the underlying price, but you can't recalculate what the options price would
Yeah,
be.
sure. You can't calculate it with options.
Okay. No, that's important because a lot of people end up building systems. I know that, for example, the VXX system from a option view, they didn't end up recalculating everything beforehand. And then when you need to be able to have those pullbacks in your system to see what it ends up looking like when you stress test it.
Yeah.
Because otherwise you're going to be writing your parameters.
The plan is to get 100% as soon as possible. So you have some money left, because you take all the time you take profits. You take profits all the time. You don't wait for a trade, long trend running. You always take the profits. And now I made 100%. I can recover completely if it really went bad.
Well, great. I think that should do it. I don't see any more questions. So Iggy, thanks very much. If people are interested, I'll just put that link back in here if I still have it in the clipboard. Yep, there it is. I found another clipboard tool, by the way, called Clip. It lets you paste in it has a whole history, so that's a nice little tool. But anyway, thanks very much for the presentation, Iggy. Appreciate it. Jim, for your comments. Everybody for attending. And we will see everybody next week. And before you go, Jim, you're going to present. We had a little webinar glitch. It was my fault when you tried to present the portfolio thing last week. So we're rescheduling that for next Thursday. That's going to be Thursday at noon, I believe. Yes, Thursday at noon. How to build an investment portfolio. So we look forward to hearing that, Jim.
As I look forward to it also. Thank you.
All right, everyone. So thanks again, and we will see you next time.
Okay, thank you.